Hey traders, welcome back to Trade Empire. Today in this video, we will explain our best trendline trading strategy. We will show that how you can use it for your benefit. So let's start our video after a short intro and disclaimer. So our first question is, what is trendline? A trend line connects consecutive swing highs in a downtrend or swing lows in an uptrend, helping to visualize the market's direction. Here on this chart, we can clearly see that the market is in an uptrend, and we have impulsive and corrective moves. And the highest point of an impulsive move, before corrective move, is known to be a swing high. And at the end of a corrective move, from where the next impulsive move starts, is known to be a swing low. And when market is in an uptrend, we draw our trend line to connect swing lows. And in a downtrend, we also have impulse and corrective moves. And at the end of each impulse move, a swing low forms. And at the top of each corrective move, a swing high forms. And we will now draw our trend line and connect swing highs. But here's an important point. Price won't always move this smoothly in trending markets, but we are showing you this as a reference for what a clear trend looks like. But here's another question. Why we draw trend lines? The first reason is that trend lines can serve as dynamic support and resistance levels. Here we can see that the upper trend line acts as a resistance when price tap on it. And the bottom trend line acts as a support when price taps on it. Here's an important point. We don't enter trades just because price touches a trend line, even if it may act as support or resistance. We always wait for price action confirmations along with other confluences. And the second reason to draw a trend line is that breaking the trend line may signal that the current trend is weakening or about to reverse. Now look at this example. We can first see that the market was in a downtrend. So we draw a trend line like this and connect the swing highs. Once the price breaks the trend line, the market sentiment shift from downtrend to uptrend, and market is no longer in a downtrend. And now we will only look for buy trades. But here's an important point. A trend line break alone isn't enough to enter a trade. We use it alongside price action analysis and wait for strong entry confirmations. Now let's move to our next topic, how to draw proper trend lines. Let me show you the key concepts that we use to draw trend lines properly. First, clear and obvious trend lines are usually more effective. Always look for trend lines that are obvious and easy to draw. Because the clearer they are, the more likely other traders are watching them. Second, the more the touches, the better it is. More touches make a trend line stronger, but they don't guarantee it will hold the next time. Third, trend lines should be viewed as zones or areas, not exact lines. Just like support and resistance, treat trend lines as zones, not exact price levels. Fourth, don't force a trend line. Avoid forcing trend lines to fit the chart. They should serve as a tool for guidance, not a fixed rule. So now you have learned all the concepts about trend lines. Now let me show you a real chart example, where we will apply all these concepts and draw a proper trend line. But before we continue, here we have another question. Should trend lines be drawn from candle bodies or wicks? And the answer is that you should focus on drawing trend lines with the most touches. It doesn't matter if they connect bodies or wicks. So here in this example, we can see that we are in a downtrend. And we will draw our trend line like this, so we can get the most touches. And we can see that sometimes trend line touches the body of a candle, and sometimes only wick of the candle. And we will also draw a trend line to the bottom. Once again we can see that the trend line sometimes touches the wick only, and sometimes the candle body. And sometimes we did not get any touch, and that is fine. But here's an important point, as swing highs and lows shift over time, and it's perfectly fine to adjust the trend line to a more suitable position. Remember, trend lines are just guides and should be treated as zones, not exact lines. Now let's move to our next topic, What's the best way to trade using trend lines? So we use trend lines into key ways. First, we have a trend continuation trading strategy. Second, we have the reversal trading strategy. Let's start with trend continuation trading strategy. So in this example, we can clearly see that the market overall trend is bearish. So we will only look for sell opportunities. And we will now draw a trend line and try to connect these multiple points. And if we look a little bit left, we can notice this support level that became a resistance level now. Next, we will highlight this point where support and resistance intersects a trend line. This is what we call an area of high confluence, where multiple technical factors align. An area of high confluence is where multiple price action concepts align, making it an ideal zone for high probability trading setups. It simply means that many traders are watching this area closely for potential trade opportunities. Now let me explain more briefly. This area is an area of confluence, as many traders are watching it to place their trades. Different type of traders are waiting here, like support and resistance traders, trendline traders, and candlestick pattern traders. All of these traders with their own trading style are observing this area for short trade entries. As price approaches this key area we've highlighted, we're closely watching to see how it reacts in terms of price action. We don't immediately enter a short trade just because price reaches this level. No matter how strong the zone looks, we never enter blindly. We always wait for clear price action confirmations, because price can easily break through even the most reliable looking levels. So here we can clearly see that after price reach into our highlighted zone, it has first created a hanging man candle, and then a bearish engulfing candle. So this is another sign that price will now reverse from this area. So here we could have an aggressive short entry, but we did not execute any trade here, because just a candle reaction to an area does not mean a confirmed reversal. Keep in mind that this tiny move here is an uptrend in lower time frame. So to confirm that the short-term uptrend is over, we will move into lower time frame. This was the daily time frame, so our lower time frame will be the 4-hour. In this time frame, we can clearly see the swing highs and lows of short-term uptrend. Now listen, here we have many reasons to execute our trade. First, you could have placed a trend line on this short-term uptrend, and once the price broke it to the downside, you can execute your short position. Second, we can clearly see that when price get into this zone, it made a double top pattern, which is one of the most effective reversal chart pattern. And we can also see this bearish engulfing candle. So we can execute our short position right after this engulfing candle. Stop loss will be above this double top zone, and we will target 1:2 risk and reward ratio. And the third way to trade here is to wait for this double pattern to complete by breaking the neckline to the downside. After the neckline broke, you can aggressively execute here, or you can wait for price to retest, and then you will execute after any bearish candlestick pattern. So now that you have learned how you can use trend lines in a continuation trend, now let me show you an example of reversal trend line trading strategy. So in this example, we will show you that how you can trade using trend lines. When market shifts its trend, we call this reversal trend line trading strategy. So here on the screen, we have the 4-hour chart of USD/JPY. And we can clearly see that market is in a downtrend. So we draw our trend line like this, and connect all possible points. And we can see that our trend line has been broken to the upside, and now market can start moving upward. But we do not execute our trade just because the trend line has broken. It can be a fake out, and market can again continue moving downward. So, we will try to find key reversal price action patterns. Like here we can see, this is a double bottom pattern, and it is one of the best reversal trend pattern. But here's a question: what does the double bottom pattern indicate in terms of price action? It signals that sellers couldn't push price lower, indicating a loss of bearish momentum. And after finding this double bottom pattern, we can also identify this key level, that acted as both support and resistance. Next, we can identify this area of high confluence, because in this area, multiple price action concepts are aligning. Now that we've identified our optimal trading zone, let's drop to the lower time frame for a more precise and earlier entry. So here in 1 hour time frame, we can place our trade with different entry setups. But for us, we will execute our trade here, because after price break above the trend line, we wait for the price to come back at any important zone near trend line. Or if we don't have any zone, then we will wait for the price to retest near the trend line and give us any candlestick pattern for final confirmation. But here we have many multiple confirmation and reasons to go long, like after breaking the trend line, price retests to our both support and resistance zone, and also the trend line. And after that we have this bullish engulfing candlestick pattern here. So, we will execute our long position at the close of this engulfing candle. Stop loss below the trend line, and we can target the higher time frame key level, or just 1:2 risk and reward ratio. Remember, combining all our analysis reversal pattern, trendline break, and key structure level, turn this entry into a high-quality trade. So guys, that's all for today. And if this video has provided you some knowledge, please leave a like and subscribe the channel for more trading videos. Wish you good luck for your trading journey.